basically the point was that the prices are continuing to go up.
Right. Yeah.
So if you don't kind of jump now, the market, we both agree, isn't going to slow down or correct.
Episode 3.
Episode 3, here we go.
Mr. Cam, what's going on?
Not much, man. Not much.
Life?
It's good. It's been a busy week as well,
Yeah.
but got a sale. Woohoo!
Ooh, finally.
Yeah. It's
good.
been a productive week though. We're in a multiple offer situation. 39 offers.
Where?
Curtis.
In Curtis.
Yeah.
Townhouse?
So townhouse.
Yeah.
3-bedroom townhouse. My client was super motivated to get this. We've looked at a few of them, and she said this is the one. Loved the layout. Loved. Had an unfinished basement, which she liked, which was kind of interesting. But yeah, it was 39 offer bidding war, which was nuts. The process was a little bit strange. The listing sales rep was only going to do one shot, which you know how I feel about that.
Yeah.
I think it's just not smart.
Right. Did they
And
do that?
He tried to. He tried to. This is what was interesting. He's numerous times said, bring your best offer. You may not get a second chance. And so, of course, we came in strong. We came in at $700K.
Listed for
$549. But again, that's
Yeah.
that's what the comps in the area supported. And again, the market's moving really quickly. And she specifically wanted Curtis. There was options like there's townhouses in Oshawa. One went for $721 in Oshawa, and we looked at another one in Bowmanville that went for $645, which was a smaller unit. Didn't have an ensuite bath. Didn't have a 2-piece bath on the main floor. Really, we felt this one was a much better location and product, being in Curtis and what it had. But anyway, so we put in our offer, and he called me on the way to the client's to him presenting the offer, and he was like, okay, there's like you're in the top, and there's a couple of you in the 7s, right? So I'm like, okay, in the 7s, we're 7, so we can't be in the lead. And he wanted to know about my client, so I told him and said, here's how strong she is, here's what she does for work, kind of thing, trying to secure it. But so then like 15, 20 minutes go by, and I'm like, I don't feel good about this. So I call him and I say, what's going on? How's it going? He goes, well, we're leaning towards taking another offer. And I go, okay, well, what if our client went up to 710? Would that help? And he goes, well, yeah, certainly it would help. So he was, I presume, ready to sign and accept something else. And I just said, forget it. Yeah. I'm going to just kind of say, put the bug in their ear and say, look, I'll have a 710 order for you. And he's like, okay, well, if you send that would change things. So right away, I'm like, great. I call my client. We ended up going 711 because we're like, let's throw an extra 1,000 in there just in case, just to show we're serious. So then he wanted to, give the other person a chance that was going to get. I said, fair enough, do it. I think that's smart, right? Let them have a chance. They also come up to 711, right? He's like, you're not supposed to share what you're as a listing salesperson, but again, a lot of times it does happen. And, as buyers, that's what they want. They want that chance to, you know what I mean? If they can win it. But he's like, I don't want any more money. We want to know how strong you are. So we ended up increasing our deposit to $50K, and that's really what won it for us. So,
wow.
Yeah, it was interesting. And then apparently someone came in over after and went up to 715. But he'd already kind of verbally agreed to us, but he certainly could have come back to us. So, I mean, again, it seems like we paid a lot for this, but there was 2 or 3 other parties that would have paid more, would have increased their price. So, and I look at it like, if we lost, you have 38 other people, now looking for the same product.
Yeah, exactly.
This is just the market that we're in. So, and I kind of posted on my Instagram a little funny joke talking about, if you, I forget what it was like, if you want to, basically the point was that the prices are continuing to go up. Right.
Yeah.
So if you don't kind of jump now, the market, we both agree, isn't going to slow down or correct. But
yeah,
we'll see, right?
Yeah, it's
you never know, I guess, right?
Exactly. So I mean, I have friends who are waiting for a correction. I have clients who are waiting for a correction, and I've always said that the last time that there was a correction, or let's say the last two times, right? Like 08, 09, and then 16, 17.
Mm-hmm.
08, 09, there's obviously like a fundamental issue with the banks and how they were running their business. So that's kind of been cleared up. There's a lot of regulations in place. And then you talk about 16, 17, there was a government interjection which resulted in a correction.
Yeah.
Right? So the banks are not messing around anymore in terms of how they run their business. Government, I mean, I don't know what else they can implement to correct the prices.
You know what I have heard from a pretty experienced investor, that they are talking about increasing the capital gains to 75%, which is some government intervention. I think it's trying to aim at the people that have multiple properties, which makes sense to me. I don't think that would cause any sort of correction.
Yeah.
It makes sense because as we know, on a primary residence, you're exempt from capital gains. So it would really target investors and people that have multiple properties.
Yeah. So I would say that majority of homeowners are purchasing it for the purpose of principal residence, right? Out of our population, a small portion would be investors, and most investors are long term. Of course, there's people who are flipping projects, fine. But
I
I'd
mean,
say,
like even in our flips, we don't get capital gains.
No, exactly.
You pay 100%.
100%, yeah, and the numbers still work.
Yep.
So
Just the cost of doing business.
Exactly. So now you're talking about majority of the principal residence people and majority of investors are long-term buyers. So sure, increase it to 75%.
Yeah.
I don't think that really hurts anyone. So again, they say, market's going up, and how high can this continue for? So we're saying, well, for there to be a correction, there's got to be, something done by the government, and the options they have is very limited. And then you start comparing Toronto to, other world-class cities like London, New York, LA, and we're still cheaper than those areas, even Vancouver.
Yeah.
So, I mean, I want people to be able to afford homes and purchase it and have that opportunity to be homeowners, but people waiting for a correction, I mean, I guess keep waiting. I don't know when it's coming, but I'm not waiting for the government to do something for me to, get ahead in life.
Yeah. Totally. I know that's kind of how we felt. And I mean, it seems crazy winning bidding wars, in this market. You're kind of like, holy smokes. But, again, it's just the way it goes, right? So if you want to win them, you kind of have to have that, obviously firm offers as well. That's a no-brainer at this point.
Yeah.
If you're trying to put it in. But yeah, so that was my week. It was, kind of taking care of that. And did you have any, what's going on with you this week?
I've got clients looking to buy, but we're not having any luck. Everything's super competitive right now. I'm essentially finding that, once I figure out what my clients' purchase price is, max purchase price, I'm essentially stopping my search at 100K under that price range.
Yeah.
So, there's a bit of difficulty there, but it's a matter of time. Like I've never pushed anything on any of my clients, so I'm not your typical, sales guy to say buy. Like,
Yep.
If someone's not comfortable, I'm not pushing anything on anyone.
Yeah, I think we both had that approach, and it's worked well. More analytical, more here's what makes sense. Especially we're working with a lot of investors, and they're looking at numbers, and I feel like we're getting. I don't know about you, but are you getting a ton of calls of people from outside of Toronto, West End areas?
Yeah. Oh yeah, it seems like everyone's looking for a flip project in Oshawa. Everyone's looking for a duplex conversion in Oshawa, and everyone wants it for 500K. And the new 500 is 600K now.
Yeah.
So,
it makes it tough. It's tough buying it there, especially for investors. I think right now.
Yeah.
We got a listing appointment this afternoon, though.
Yes.
Right?
Yeah. We got a listing appointment. We're gonna go see.
Cool. That would be gold. Right?
Investor wants big money for it. But we are in the market of getting big money, so we might be able to get big money for this.
Yeah, well, good luck to us.
We'll see how that goes. We'll update everyone next week. What should we talk about? Should we talk about, why don't we talk about, the importance of buying good properties? Whether you're buying a good property, paying a premium for it, buying a good property in a good location, Talk about the importance of that and maybe what happens when you have, when you're on the complete opposite side of the spectrum. Like, what are you seeing with investors right now?
Yeah, it's been interesting because I mean, our philosophy has always been, buy quality legal two units, convert legal two units, have a nice 3 bedroom up, 2 bedroom down, getting those A minus tenants, I always call them, because the A plus tenants are going to either detached homes or their own, separate units, whether it's a townhouse. But you could still get A minus tenants where they're in an upper unit of a nice, 3 bedroom bungalow, right? They got land, they got a backyard, they got their own private driveway. They're in, good communities in and around Durham region. And for years, we've had people, bash that and say the numbers aren't good enough. My cap rate's not high enough. My cash flow is not high enough.
Mhm.
It doesn't meet the 1% rule. I would rather go.
So let me ask, has the 1% rule ever worked in Oshawa
Never.
or in the
Never.
or in the GTA?
Never.
Yeah.
Never. And it doesn't because we're in a market that is going to appreciate more.
So the 1% rule originated where?
The boys in London are the ones that
Mhm.
really promote that because they could achieve it in London.
Mhm.
And I mean, again, for those that don't know what the 1% rule is, it's essentially that if, let's say, a property is worth $300,000, that it is going to bring in $3,000 a month
In rent.
right? Which in Oshawa, for instance, what we were normally seeing was about 0.5%, where you'd get $3,000 for a legal two unit, 16 up, 14 down, and it'd be worth $600,000,
Mm-hmm.
right? So a lot of people shied away from that, and they said the cash flow wasn't good enough, and that property would only cash flow, after maintenance, vacancy, property management, only a couple $100 a month, right?
Mhm.
And investors,
Yeah.
laughed at that and said
Yeah.
no. They'd rather get a student rental. They'd rather house hack. They would rather, buy something in Northern Ontario where the vacancy rates are higher and,
Yeah.
the properties themselves are not in appreciating markets, but they had the cash flow.
Yeah.
And I don't know. Like all I'm seeing now is all these people now pivot into stock hacking and mining crypto and complaining about real estate and their tenants not paying and the LTB being unfair. And it's like, okay, you honestly, you picked that property, right?
Mhm.
You got into that business. You had the choice to purchase it. Now you're going to, blame real estate investing or say that it's not passive enough for you.
Mm-hmm.
And a lot of people don't think about that, right? And that's kind of something that we've been promoting for years to say, look, these properties are, I mean, it's not passive. It's still active. You still got to find really good quality tenants, but it's certainly a lot more passive than a student rental where you have to turn over tenants every single year.
Yeah.
Yes, you get higher cash flow, but comes more stress. It comes with more work. Or I know last week on the podcast we talked about JV partners
Mhm.
and people, buying all these multiple properties, and then they were like, "Holy smokes, I don't want JV partners anymore." And it's like, look, you have to understand what you're agreeing to and what you're buying and what your business model is and what you want. If you want high cash flow, understand that it's going to be a lot of work.
Mm-hmm.
Understand that it's not. There's going to be more stress. There's going to be more maintenance on it. You bet your numbers better reflect that, right? So I don't know. It just kind of pisses me off a little bit here watching now everyone pivot to stock hacking because they're pivoting out of real estate or
Yeah, and I would say like there's nothing wrong with adding additional streams of revenue to or different.
No, totally. I'm not
streams of
knocking that
income.
at all.
Yeah.
I'm more knocking the fact that they're blaming their investments,
Right.
their real estate investments, in a market that has been
Yeah.
like phenomenal.
Mm-hmm.
There's no better word to say that. We've done, year over year,
Yeah.
30%.
Yeah.
To complain about real estate in this market
Yeah.
is a little nuts to me. And I get
that's
it.
right.
The LTB has its challenges, right? The
Yeah.
RTA has its challenges. Getting tenants out that aren't paying is difficult. But, I mean, you should know this going into it. That's it's like starting a restaurant and understanding the failure rate of a restaurant or how much work it needs or how late the hours are. It's like opening a restaurant going, I didn't think I'd have to be open till 10 o'clock every night. Well, duh.
Yeah.
That's that's what you got into. Like, that's what you signed up for, right? So, I don't know what it is. If it's just, a lack of research or...
And you've lost potential partners in this office because of the conversation of 1% rule. people
Yeah.
looking at numbers and saying this is not 1%.
Oh, I get that all the time,
Yeah.
right? And yeah, I know. I remember you.
Yeah.
I was like, wait, what is he? But
Yeah.
yeah, I had someone in here who literally I spent an hour and a half with, going through all the numbers, explaining Oshawa, and then only to them say, well, it's not 1%. And I went, what? Like, why did you waste my time? Like, what?
Yeah.
I could have told you that for free,
Yeah.
in one sentence, right?
Yeah.
And again, if that's what you want, go to an outside market. I
Yeah.
mean. Hamilton's the same way. Hamilton on the west end, you don't see 1% rule there. You don't
Yeah,
see them. The
yeah.
closer you get to Toronto, the worse the numbers are. But the higher chance of appreciation when you're in that major city, and that's why
Yeah.
we've always liked Oshawa
Mhm.
for that balance of quality tenant to a better chance of appreciation. We'll call.
Yeah, I'm even thinking about it right now. My 2 duplex conversions, they're not going to be 1%, but they're going to be extremely profitable still.
Yeah.
Um,
And more importantly, once they're done and once you have tenants placed, they're going to be a lot less work than properties that where you're Airbnb-ing it.
yeah,
Or of course, if you Airbnb them, your profit, your cash flow would be way higher.
Mhm.
But it's now an active business. It's not as passive. Or if you rented them by the room, or if you had students in there from Durham College or UOIT, or I guess it's Ontario Tech now. So there are other plays, but you tell me what is your ideal tenant going to be in these?
I'm hoping my upper units where I'm getting a premium for it. So I'm hoping that will be around 19 to $2,000 for an upper unit. Either a young couple with maybe 1 kid,
Yeah.
or maybe like an elderly couple,
Yeah.
who are downsizing.
Yeah.
That's what I want. I'm not.
Yeah, but a long-term tenant, right?
Yeah.
That's going to cover the
Yeah.
utilities. That is paying on they're ideally, that doesn't have to be on a 1-year lease, but
Right.
maybe they're a month-to-month lease, but with the intention of staying for a year or 2 years, kind of thing, right? So once you have them in, you're simply just collecting rent and making sure you're screening them properly
Yeah.
so that they come in. But I guess this is just the nature of the industry, right? There is a lot of people that get in and get out or mismanage their property.
Yeah, I've always said this about like out of town investing is that I live a certain lifestyle. I'm married. I don't want to be gone on the weekends. I don't want to be on the road.
You don't want to
3-4
drive to
hours.
Windsor every weekend?
No, I mean, respect to those who can do it. I can't do it.
Yeah.
And there's certain things I'm not giving up
Yeah.
in my life.
Yeah. No, and it's part of the hustle. It's part of like, look, that's where they can get in and afford
Yeah.
one. I understand that. But then don't complain about it after.
Yeah.
Right? You
Yeah.
know what you're getting into.
Yeah.
You're making that conscious choice. To go to Windsor or go to Sudbury or go to Kingston or go to Ottawa or go to whatever market you want to go to, right? But
Yeah.
yeah, no. So I mean, that's just what I've been seeing, and I mean, I think it's to each their own. But if you're going to get into something, make sure you're researching and understanding what exactly you're into and and the pros and cons of that. Right?
Yeah.
With higher cap rates come more risk. That's always been true.
Yeah.
So if that's what your goal is, understand why.
Yeah. No, I agree. The other thing we wanted to talk about was, I guess it'll be, along the topic of highest and best use with garden suites.
Yeah.
So
What have you been
there's
seeing about garden suites, or what are your
So-
thoughts on them?
There's a lot of talk about, the Ontario government, or even I guess the federal government now, allowing for garden suites to be, a reality in the GTA. I believe, some municipalities have adopted it, and others are following suit. So, in my opinion, that's the next big thing coming up, which is important for investors to know because, if you are planning on achieving that, then you need to buy the right property today, right? You need the right amount of lot coverage. I've heard the magic number is around 5,000 square foot in terms of your full lot coverage.
So what's an example? Yeah, what's an example?
So 50
lot?
by, I guess, 100 would
Yeah.
be 5,000 square foot
Yeah.
at the minimum. Because for those that don't know, a garden suite would be, if you can imagine a typical bungalow, you have a bungalow, and then behind the bungalow you have your backyard. This quote unquote garden suite would be placed in your backyard. So you need enough area coverage in your backyard to be able to essentially build another dwelling. Of course, your square footage would be limited to the lot size that you have, but the key is you need to buy the right property today. So if you're buying a property that's our minimum requirement for a duplex conversion is a 38-foot frontage or 40-foot frontage. So if you're buying that layout, you may not be able to do that.
Yeah, and I think it's Bill 108, I believe.
I think it's Bill 108,
The Ontario government came out. So I know municipalities are trying to come up with plans or policies for that. So that'll be interesting to see how that plays out. And I mean, we've always had this debate, do you, I had someone message me yesterday about, wanting me to analyze a pre-construction investment. And I quickly quoted them saying, "Your pre-construction speculation, right?" And they were like, "Yeah, I guess it is." I'm like, "You're really just hoping the market goes up." But, this is one of the main reasons why we've talked about buying land or buying the legal 2 unit is that opportunity that could come with owning land, right?
Yeah.
Which, this is exactly it. Now, do you think with the garden suite, like, what do you think is coming after that? Like, are you gonna put a basement in your garden suite? Are you gonna?
Yeah, it's an interesting question. I've heard that. I've heard people saying, if you are going to build a garden suite, make sure that you have a basement, because the next play may be that your basement can be eligible for, a legal accessory apartment. So now you're really doubling down on your profits. You essentially have another duplex inside your duplex. Or on the same property.
And it's interesting because I think you could do that garden suite, and then what we've seen in Toronto is the bungalows or the houses that get old enough, because the lots, like even a 45 foot frontage lot, are super valuable to people that want to then tear down that house and build a new house there. Right, the land is what is appreciating, right? The building itself is depreciating. So there's just that unlimited opportunity, I think, for investors when they own and again, it kind of goes back to that 1% rule. It's like, you're not getting the 1% rule, but here's what you can get,
right,
as well as that. So I mean,
I think the options are unlimited with that. Especially if you're buying a big lot. What are we seeing in the GTA in Scarborough? We're seeing quite a bit of teardowns. We're seeing bungalows that are perfectly fine for duplex conversions. People are spending $600,000-$700,000. And they're on 50-foot lots by 120. But people are tearing it down and building a 3,000 square foot house and selling it for, I don't know, 2.3 million. So you got options. But again, you're not buying a 2-story house on a 25-foot lot, right? You're buying a bungalow on a 50-foot lot. So you're paying a premium. You're for sure not getting 1% rule.
No.
But you got options.
Absolutely, which is kind of what we like, right?
Long-term play, but real estate is a long-term play. Yeah.
Unless you're flipping.
Which better be in and out in a month.
Yeah. No, I think that's very interesting conversation. Anything else you want to? Should we chat about today?
I've been buying material for my properties, and I'm not seeing any delays like I was when COVID first started. So what's the process of you buying these the materials now? So like what's Home Depot, or are you getting them from Home Depot, or where actually I'm not buying anything from big chain.
Okay, cool.
No, I wouldn't say anything. Little items we are buying from big chain.
Is that personal choice or just?
You know what? When I thought about it, the numbers at a local shop or a small business was cheaper, so we were naturally going there. But now that I think about it, and I'm glad we're going to a local shop. I'll very well support someone, a smaller company, and where we're buying is not a small company. They run a big operation. They're here. They're in North York. They're in Waterloo. And I'm
Where's that? Where are you talking?
So
about?
in Whitby, Cosmorama,
right,
is where I'm buying a lot of my materials from. The guys there have been super helpful. they'll deliver your material for like $50. It's nothing.
Yeah, that's awesome.
You know, the hassle-free convenience of it. Yeah, love it. So, I mean, so to answer your question, I didn't make a decision based on I'm not going to support big chain.
Mm-hmm.
I realized that I'm buying from a smaller shop and, you know, prices are competitive if at certain points, even beating Home Depot. And then I was like, oh, sweet, I'm buying from here. It's a smaller business. I'm supporting these guys. So
you get that personal touch too.
Yeah, exactly.
Right?
Yeah. And you know what I found? I don't know if you've had this experience. I was walking into Home Depot and I found that people were like, the workers there were avoiding people. I couldn't get help. Like, I'm trying to find stuff and, you know,
they're getting paid hourly, right?
Where's
like,
so-and-so? Oh, it's, on the other side.
Yeah.
And then you go to the other side and there's no one there to help you.
They're getting paid hourly and they're working during a pandemic, right?
Yeah.
So, I mean, they're not as motivated as, you know, I know at Cosmo Roma, like you can be talking to the owners and the stakeholders in the company. So they're, you know, they want to keep their business going. So it creates a better win-win for you and for them, right?
Yeah.
So, no, I love it.
Yeah.
Yeah, I had some bigger news. I thought, you know, I forgot to mention though, because remember last week we were talking about I was deciding whether to try to find a JV for that property.
Yeah.
So I did. I found someone who's going to go on title for me and qualify for the mortgage for 15% equity in the property.
Nice. So that's a different model, right, than what a lot of people hear of.
Mm-hmm.
So you decided that instead of finding a partner and giving up 50% of the equity and getting the cash from your money partner, you're going to put in the money yourself.
Yep.
But all they're going to do is qualify for the mortgage today and when you have to refinance the property.
Yeah, so that was the tricky part, right? So it was kind of determining, because even what we talked about, our challenges were, what if we want to do a garden suite in 2 years? Then how does it break down, right? Like who puts in the money? So we're still kind of working on that and kind of the solution I'm thinking of is, again, so they're going to have 15% of the mortgage pay down and appreciation. And what we determined was that we said that the ARV is going to be around 730, which would be me leaving in about 55K. So essentially, we needed to come up with a number that you know would be the start point of where their increase and their mortgage pay down would start. So we determined 730,000.
Is that a fairly conservative number? Can it be higher?
It would be higher, right? But that's why I wanted it to be a fair number for both of us. Like, you know, it's still, I'm still going to get my 50K back first. So even if it was higher, but again, if once my 50K is paid back, I wanted them to get some profit. I wanted them to make some money. So I really wanted it to make sure that it was a win-win for them. They're looking at it like they're literally putting in no money. They're, you know, I found the deal. I'm doing all the work. That's why I'm getting 85% of the profit, right? So, and they're.
So maybe we can. That's really interesting. Maybe we can talk about that in more detail next week. And
yeah, absolutely. It's a little bit tricky. I'm still working on it, the finer details, and you know, again, we're not closing till February 8th on that one. So, yeah, happy to keep it posted and update on it. So.
Congrats. That's a good find. Good deal. Good partner.
Yeah. It's hey, they can be found in this market, right? Yeah. So it's I had the Ajax flip too, which I think we've talked about enough. But
yeah, maybe we'll have to do like tours of those properties too.
Yeah, well, that's the interesting part, right? We each have our own private YouTube channels that you can go check out a lot of those videos. So I know this channel is you know, and podcast channels, you know, strictly for you know, ours, but if anyone's interested, head over to Saman's YouTube channel and my YouTube channel, and
we'll figure out a way to link it here somewhere.
We need a technology course here. We're going to be hiring someone soon to help us with this, I think.
We do.
Good, man. Good
awesome
stuff. I think that's a good episode for week 3 here, and episode 3 we'll see you guys next week.
See you next week.